So it is important to have the higher credit score, which you're going to get most likely a lower rate, lower mortgage insurance, maybe a better program. But we don't necessarily need your credit to be perfect to buy a house. We actually go down to a 500 credit score, if you can believe it, with an FHA loan. If you have 10% to put down and your score is below 580, we can possibly do that loan. I mean,
If you don't have any credit, we can help build a credit score.
we can use either build a credit score, or there's options for someone to buy a house with actually no credit if they have alternative ways of verifying their credit, like paying for a gym membership monthly, or
Utility bill.
paying your
Cell phone
utilities
bill.
monthly. Rent is huge. I mean, but there is other ways to alternatively get you approved, even if you don't have a credit score yet. It's easier if you have a score. So, and it's very easy to get a credit score if you're starting with no score. It's harder to get your credit score higher when you start to have collections and things on your credit that need to be removed in order to get your score up. But down to 600 credit score, we could do down payment assistance up to 5% of the purchase price for an FHA loan. So it's not like, if your score is at the lower levels, 580, you only have to put 3.5% down. So you could still get a loan. So don't let it hold you back. Even if you get a higher rate now with this lower credit score, once you make 6, 7, 8 mortgage payments on time, your credit score is going to skyrocket up. So we'll be able to do a refinance at some point to get you down to a lower rate. So maybe this getting into a house with a higher rate is a temporary thing. And what you need to understand is your payment's going to come down through time as rates improve and as we monitor that and get you down to the lower levels when they're available. Credit, it's important, obviously, making timely payments. It shows the lender that you know how to manage money. Do's and don'ts when it comes to credit, and this is actually after you get your pre-approval done too, do's and don'ts you don't want to do. Keep your credit balances low, credit card balances. You don't want to go out and get pre-approved and then charge $5,000 in your credit card for something, because that's going to change the pre-approval, and we're going to see it. Do set up, obviously, reminders and stuff when your payments are due. This is all just kind of basic stuff that you can look through as far as do's and don'ts when it comes to your credit. Don't go out and open a new credit card. Don't move debt around. Don't go buy a car.
Or a boat.
So, like I was talking about the lowdowns and down payments, there's no 20% down rule whatsoever. The only thing that happens when you put 20% down on a conventional loan is that you don't have mortgage insurance. And I've heard so many people worry about mortgage insurance so much.